Welcome back, traders, to Stat Oasis channel. In today's video, we're going to continue the beginner series, where in last video we finished the building blocks, and today we're going to jump into money management. And in order for me to explain how money management works, I'm going to create some strategies and show you the differences. So in the beginning, I downloaded the Apple stock, because with stocks we can do one share, so I can easily show you the difference in the money management. And you can easily do this through a data manager. Just go to Yahoo and download Apple Daily or any stock. And then what we're going to build is a market strategy. And basically, I only change, it's a simple strategy, I change it to long only to make the code easier. And SQX signal, random generation. The conditions, I change 1 for the exit. So again, to control the strategy. And then no stop loss, no profit target required. This is very important. Data, I just picked the date from 2007 to 2017, that's 10 years. Trading options, I only did 1 trade per day allowed. Building blocks I didn't touch, or maybe I did. Basically, I just want market orders, no stop loss, and only exit after number of bars. That's the only exit allowed. I don't care what's picked here. Money management, we're going to start with fixed size at 100 shares, $10,000 account. There are nothing in robustness check. And in ranking, I just picked a profitable strategy, basically with a profit factor. So let's start building. And we should find some strategies really quickly. Let's stop. And then let's pick a nice curve. This looks good. 178 trades. Oh, this is even more trades. That's even better. Okay, so let's pick this one. So I'm going to take it to retest, copy original, and apply current configuration. So now in Retester, everything is the same. And I'll show you that the results here. And let's put the strategy to be tested in fixed size in this bank, which is empty. Do the test. And you can see now that this strategy, so it made 12,563, 387, 12,563, 387. Okay, so it's exactly the same strategy. So if we start with risk fixed percent balance. Now, this will use the amount in your the capital available in your account, including the open profit or loss. So for example, it's 10,000 you start and you make 1 trade, and the trade goes to profit. Yes, it's open profits $2,000. You didn't close it yet. So that means your account balance now is $12,000. And this will use then $12,000. So it always includes the open profit and loss, and that's why it's called balance. And the way you use this is you pick a risk percentage per trade. So for example, here we're using 5% risk per trade. Size in decimals, it's always 0 for futures and stocks. And if you don't remember, you just hover over the question mark and you can see. And then the maximum lots allowed, that means my account will grow and decrease and increase during trades. And so what's the maximum number of lots, or in our case shares, I'm allowed to trade? I'm just going to limit it to, let's say, 2,000 shares. And the minimum size allowed is 100. Basically, if the risk is not enough to trade even 100 shares, I'm forcing the computer to trade 100 shares in order to see the comparison with this one, because this one always traded 100 shares. Okay, So now that we pick this, we go to progress, and then I'm gonna put it in this bank. Test, and it should show up here. And now, actually, let me show you this one. So this one, as you can see, all the trades are 100 shares. Yes, it's fixed size. Here now, you can see that the number of shares is changing. And we reach this calculation by finding some measure. Okay, so if we go back here, we're risking 5% of 10,000. That's $500. Then, because we don't have a stop loss in our strategy, remember, the strategy has no stop loss. It's only exiting after 2 bars. So, no stop loss. Long entry, no stop loss. Only exit after 2 bars. So when we don't have a stop loss, the Strategy Quant have to measure this risk somehow. And to be honest with you, I don't have the answer for that yet. And let me show you the trades. But my guess, it's either some ATR calculation or some standard deviation of the average loss. And that's how you reach this number of shares. Now, this is confusing because I don't know how this is calculated and I cannot tell you why. But in the next example, I'll show you how they are reaching this number. And that's why on purpose, I built this strategy with no stop loss. Now, if we go back and then if we pick risk fixed percent of account, this should be the same as this. And in fact, if you click on help, then it will load this, and you can see that the risk fixed balance, advanced money management that is recommended for real trading, and then risk fixed balance and account, it uses account balance instead of equity. So they are both the same. But somehow, SQX team, they did something a little bit different. And I would have rather that they did this option where you can just pick use account balance or no. But anyway, they did it both ways. For fixed percent of account, we are basically using the account size regardless of the open profit or loss. So if we have an open position with $2,000 loss, still we're going to treat the account as 10,000. That's one. The second difference is we have a stop loss here. So these are both the same. I know it's shuffled, but they're the same. Risk, size in decimals, maximum lots and minimum lots. And this one is risk, size in decimals, minimum and maximum. The only difference is stop loss. So if our strategy doesn't have a stop loss, then we can create a stop loss here, which this is the case. Our strategy doesn't have a stop loss. So these are both the same. This one using the balance with open profit and loss. This one doesn't use the balance. It uses the actual account, so no profit and loss included. And we can tailor the stop loss if our strategy doesn't have stop loss. So size in decimals is 0 because we are using stocks, 5%. We're gonna risk, let's say, 300 ticks. That means 300 cents, which is $3 per share. And so minimum we're gonna trade is 100, maximum is 2,000. So if we go to progress, put it in this bank, and let's start. We can come here and let's double click. Okay, so how are we getting this number of shares? If we do a calculation, our starting account is 10,000 multiplied by 5%, that's our risk per trade, divided by 300 ticks, which is $3 per share. So we get 166 shares. And that's what we're trading here. And then if we do this trade, for example, 10,729 multiplied by 5% divided by 3, and that's 178. That's 177 here, very close. And then let's pick a big number, see if we have some. Yeah, so this one is good. 11,245 times 5% divided by 3. We get 187. That's 187. And then let's pick another one. This one. That's 11,784 times 5% divided by 3. We get 196. So you get the picture. Basically, we're determining how much risk we are allowing per trade. And then because we set the stop loss at $3, that's how it's calculating. In this one, we don't have a set of a stop loss. So SQX has to come up with its own version of risk. And we're going to find out that later. Now, fixed amount. So in fixed amount, basically, we're going to risk a fixed amount of money. And since we are with the 500, that's 5%, let's make this 500. That's in dollars. This is risk in dollars. Again, size decimal 0, minimum 100, and maximum is 2,000. We come back here, and we will put it in fixed amount. Fixed amount, start. So now we're risking only 100 because that's the minimum shares we picked here. Okay, so we're risking 500 per trade, but we don't have any stop loss to measure that risk. And if I do this to 10 and test again, you will see now it's all 10. And if I change it to 1 and do the test, and now it's only 1. And the reason is because there is no measure for the risk here. Here, Strategy Quant X finding some kind of measure and doing the calculation. Here we don't have any measure. Okay, so it's always doing this because this strategy doesn't have a stop loss. Now we will do a stock size by price, and here basically you pick the maximum number of shares, and we will divide the number. Let's do the test actually and show you. So we start with 10,000 divided by the price. So if we pick the closing price, that's 20.96. That's before the trade happens. So let's pick the opening price, 20.43. So we roughly get 489 shares. But if we go to the next trade, which we know now the closing price, so our balance was 10,262 divided by, if we pick the closing price, 20.96, we will get 489 shares for the next trade. And if we divide that to 10,262 divided by the open, which is 20.98, we get 489 shares. In both cases, we don't get their number here quoted, 484, but it's very close. To me, it looks like a bug, unless there is something else happening that I don't see. But there is always about 2 to 10 shares different. And I can show you, like, let's pick this one. Okay, so 12,943. If I divide it by the close, 21.94, that's 589 shares. And we have 592 here. And if I divide it 943 by the open, which is 2190, it's 591. So you see, there's always a small difference, 1 to 10 shares from my experience. And we can even test it on any other random number. Let's pick here now, the balance is more. So 28,018. Divided by the close, 108.91. We get 257 shares. Now it's getting close. And so if we divide now 280.18 divided by the open, which is 108.97, we get 257 shares. Uh, 40,000. So 4382 divided by the close, 154.9. We get 260 shares. Here's 264. And if we divided 4382 divided by the open, which is 15317, we get 263 shares. So again, close. So like I said, in theory, you're dividing the account balance by the price, either close or open, and then you get the number of shares. In SQX, somehow there is miscalculation, and as you saw, sometimes you're 1 or 10 shares different. It's not that big a deal. The concept's still the same. Martingale, it's money management, is a very aggressive way to bet. Usually you're doubling your bet every time you lose. You can read a lot about it. There is a lot of math behind it, but it's very aggressive and none of the professionals use it. But once it's finished, it's out of the beta phase, I'll do a video on it. But for now, I'm just gonna leave it alone. And you can read about it online and find out. But in this phase currently, I couldn't make it work. And since it is very aggressive, I don't see the need for it for now anyway. So now that we did the strategy with no stop loss, now I'm going to show you the difference when you build a strategy with a stop loss. Okay, I thought we can stop here. It's a lot to digest, and we will do the next strategies with the stop loss in our next video. So I'll see you soon in the next video.